name is Alan Anthony. Before we start this video, I'd just like to urge you to like and subscribe this video so that you will get future content on information with reference to investment and trading advice. Okay, today what we're going to do is we're going to be talking about HFX and Master the Skill video series. Today we're going to be talking about HFX strategies specifically. The purpose of this video series is to provide an overview of the HFX strategies taught by IM official educators and to help you improve your trading success. We will be covering the associate indicators of each strategy and how to use them. As we begin, it's important to remember the 3 steps to trade success. Step 1 is to identify if the price is consolidating or trending. If the price is consolidating, we want to look for trade entries at the top and bottom of the consolidation range. If the price is trending, we want to look for trade entries in the direction of the trend. Step 2 is to confirm your trade ideas using the indicators provided in the strategy. And step 3, you want to enter your trade in the appropriate direction, a call option if they're predicting the price would go up, or a put option if you're predicting the price would go down with a trade time expiration of either 3 candles or a time given by the IM official educator. To identify whether the market is consolidating versus trending, we need to identify different pivot points in the market. And as you can see in this example, on the euro to US dollar, you can identify put and call options at the top and bottom of the price consolidation range. And once price breaks out in a given direction, either up or down, we can then look for put options in a downtrend or call options in an uptrend. Now that we have covered the 3 steps to trade success, we'd like to introduce you to Cash Trap 2.0, which is a simplified version of the original Cash Trap strategy. If you haven't yet watched the original Cash Trap strategy tutorial video, we highly recommend that you watch that first before diving into this video. Cash Trap 2.0 is heavily based on the first step in our 3-step trade success, which is to identify whether price is consolidating or trending. If price is consolidating, look for trade entries at the top and bottom of the consolidation range. Within Cash Trap, you want to look for arrows at the top and bottom of this consolidation range. If price is trending, you want to look for trade entries or arrows in the direction of the trend. We do this by utilizing a tool called Currency Strength Meter. If you type this into Google, you will find that there are many versions of Currency Strength Meter. Each has its advantages and disadvantages, and for the purpose of this video, we will illustrate 2 of them so that you know how to apply them within the Cash Trap strategy. Each Currency Strength Meter takes 2 currencies and then combines them into a pair so that you can compare the relative strength of each against each other, and that will help to determine which direction the trend would be. In this example, the left side of the page, the US dollar is rated as weak. The Japanese yen is rated as strong. When the first currency in the pair is weaker than the second, we are likely going to see a downtrend. The higher the contrasting strength between the 2, the stronger the trend. In the example on the right side of the screen, the US dollar is rated as strong and the Japanese yen is rated as weak. In this case, we'll likely see an uptrend. One of the common currency strength meters can be found at this particular website. We do not endorse them, but are simply using them as an example within this video. They measure the strength of each individual currency with a certain number of bars. The more bars a currency has, the stronger the pair is rated. So in this example, the British pound has 6 bars. That means that it is stronger than the rest of the currencies in this list. The Japanese yen, which can be seen all the way to the right at the top row, only has 1 bar, 1 red bar. That means it is very weak at this present time. So if we compare the British pound and the Japanese yen, the British pound is much stronger than the Japanese yen is at this present time. And because it would be listed as the first currency in the pair, in other words, GBP to JPY, we would likely see an uptrend situation. The opposite would also be true if the second currency in the pair had more bars than the first. This can be illustrated with this little diagram. Here we have 2 weight scales, and if you imagine each bar as a weight that goes to each individual currencies, you can get an idea for the general trend direction. On the left side, the US dollar has 4 bars and the Japanese yen has 1. In that case, there would be more weight on the left side, causing the general trend direction to go up. On the right side, the example there, the US dollar has 2 bars and the Japanese yen has 4 bars. This indicates there will be more weight and more strength on the Japanese yen side, indicating that the general trend direction would be in the downward direction. Another popular currency strength meter can be found within the currency heat wave app. The general measurement method is very similar to other one that we just showed you, but it can be illustrated in a slightly different format. Here they have given us a pie chart, and the size of each slice of the pie represents how strong the individual currencies are in that given moment. On the example on the left, the Aussie dollar to the Swiss francs is measured. If we looked on the pie chart, the Swiss franc, colored in blue, is the largest pie slice on this chart. The Aussie dollar, AUD, is one of the thinnest slice within this pie chart, indicating that it is the weakest amongst all the different pairs at this present time. When we combine those two currencies together and we compare the two, the Aussie dollar is weak and the Swiss franc is strong, indicating that we are likely going to see an overall downtrend situation between those two currencies. On the example to the right, if you compare the US dollar to the Japanese yen, you will know that each slice is a little bit more similar in size to each other. That means that the relative strength of the trend between those two currencies versus the Aussie dollar and Swiss francs would not be quite as strong. But if you want to see the overall trend direction, we simply combine the two currencies, in this case, USD to JPY, and the first currency is the stronger of the two, indicating that we are going to see an uptrend. The currency heat wave also shows this particular diagram, which gives a number for the strength of each individual currency. For some people, they might find that this is an easier way to see the difference in strength between each currency. In the example on the left, we compare the euro to the Aussie dollar. And in this case, the euro is rated as 3.29, which is relatively weak. And the Aussie dollar is rated as 6.29, which is much stronger. And in this case, because the first currency in the pair is weaker than the second, we would see a downtrend. In the second example on the right, we have the British pound to the Swiss franc. The first currency in the pair, the British pound, is rated at 6.71, whereas the second currency in the pair, which is the Swiss francs, is rated at 2.86. So that the British pound is stronger because it has the higher number. It's stronger than the Swiss franc, so we'll likely see an uptrend. The way we apply this then to cash trap is that we look for the arrows simply in the favor of the trend. You will get arrows that are opposing the overall trend direction. But when we first identify if a currency pair is in a strong trend, we can then favor arrows in the direction of the trend so that they're going to increase the overall probability of winning those trades. We hope you enjoyed this HFX video in the Master the Skill video series. We encourage you to go back over it so that you can be clear on the way to apply the currency strength meter to the strategy, and it helped you to increase your success rate. Okay, guys, see you at the other video. I am Alan Anthony. Talk to you soon. Bye.